Investing is about growing your money. It's a way to make your money work for you, rather than just sitting in a bank account. By putting your money into investments, you give it the potential to increase in value over time. When you invest, you buy something that you hope will increase in value over time. This could be stocks, bonds, real estate, or even a small business. The idea is that, over time, the value of these investments will grow, providing you with a return on your initial investment. Think of it like planting a seed. Just as a seed needs time, water, and sunlight to grow, your investments need time and the right conditions to flourish. It takes time, but eventually, it can grow into a big tree. This tree represents the growth of your investments, which can provide shade and fruit in the future, symbolizing financial security and returns. Investing is important for your future. It allows you to plan ahead and work towards your financial goals, whether that's buying a home, funding your children's education, or enjoying a comfortable retirement. It helps you reach your financial goals, like buying a house or retiring comfortably. By investing wisely, you can build a nest egg that will support you and your loved ones in the years to come. If you don't invest, your money might not grow as fast as you need it to. Simply saving money in a bank account may not be enough to keep up with the rising cost of living. Investing also helps you beat inflation. Inflation is the gradual increase in prices over time, which means your money buys less and less each year. Inflation is when prices go up and your money buys less. By investing, you can potentially earn returns that outpace inflation, helping to preserve and grow your purchasing power. Investments can help your money grow faster than inflation. Remember, investing involves risk. It's important to do your research and consider your risk tolerance before making investment decisions. But if you invest wisely and for the long term, you have a better chance of reaching your financial dreams. With patience and careful planning, investing can be a powerful tool to secure your financial future. There are many ways to invest your money. Each type of investment comes with its own set of benefits and risks, and it's important to understand these before making any decisions. Let's look at a few common ones. First, we have stocks. Stocks represent ownership in a company, and they can be a great way to grow your wealth over time. When you buy a stock, you're buying a small piece of a company. This means you have a claim on part of the company's assets and earnings. If the company does well, the value of your stock can go up, potentially earning you a profit. However, if the company performs poorly, the value of your stock can decrease. Next up are bonds. When you buy a bond, you're lending money to a company or government. In return, they promise to pay you back with interest over a specified period. Bonds are generally considered to be safer than stocks, but they usually offer lower returns. They can be a good option for those looking for more stable and predictable income. Finally, let's talk about mutual funds. These are like baskets of stocks or bonds, managed by professional fund managers. Mutual funds allow you to invest in many different companies at once, spreading out your risk. This diversification can help protect your investment from the ups and downs of the market. They are a popular choice for those who want a more hands-off approach to investing, as the fund managers make the investment decisions for you. Remember, each investment has different levels of risk and potential reward. It's crucial to do your research and consider your financial goals and risk tolerance before investing. You don't need a lot of money to start investing. Here are a few easy steps. First, open an account with a brokerage firm. This is like a bank account for your investments. Next, decide how much you can invest each month, even if it's a small amount. Consistency is key. Then, choose your investments. Start with simple options like mutual funds or index funds. Finally, be patient. Investing is a long-term game. Don't panic if the market goes down. Section 4. Do your homework. Research is key. Before you invest in anything, it's important to do your research. This means taking the time to understand the basics of investing, the different types of investments available, and how they work. First, understand what you're investing in. Don't invest in something you don't understand. This could mean reading books, watching videos, or taking courses on investing. The more you know, the better decisions you can make. Next, consider your risk tolerance. How much risk are you comfortable taking with your money? This is crucial because different investments come with different levels of risk. Knowing your risk tolerance will help you choose investments that align with your financial goals and comfort level. Then, compare different investment options. Look at their fees, historical performance, and potential risks. It's important to weigh the pros and cons of each option to find the best fit for your financial situation. Diversifying your investments can also help manage risk. Finally, don't be afraid to ask for help. If you're not sure where to start, talk to a financial advisor. They can provide valuable insights and guidance tailored to your specific needs and goals. Remember, investing is a journey, and having a knowledgeable guide can make all the difference. Section 5. The power of time. Invest early. The earlier you start investing, the better. This is because of the power of compound growth. Compound growth is like earning interest on your interest. Over time, even small amounts of money can grow significantly. The sooner you start, the more time your money has to grow. So don't wait to start investing. Start small, invest consistently, and be patient. Your future self will thank you.